stock falling 3.74% today, Apple's market cap has now fallen under $2 trillion as the sell-off continues. As tech companies and all companies in the markets seem to be struggling, Apple is not an exception. The company has fallen over 30% in the last year. And with issues in China and consumer spending, it's been a rough year for Apple and potentially going forward as well. CNBC have released 2 articles about this, kind of going through, and I believe they made good valid points about the situation that Apple is going through right now. Looking through the first one, it touches on how much the stock has fallen and how the market cap has now dropped. That first hit a valuation in August 2020 as the pandemic boosted products for remote work and school. And Apple has previously hit a $3 trillion valuation in January, so basically this time last year. With issues in China and many other economic issues, Apple seems to be facing a bit of a wall that is stopping some of their growth. This fall to 125 is a new 52-week low, giving the valuation of the company at $1.99 trillion as market closed. This still puts it just above Microsoft and is the biggest tech company currently. Apple has struggled with iPhone 14 Pro shipments during the holiday season because of COVID restrictions, primary factories in China. Investors are also wary of rising interest rates and declining consumer confidence, which could hurt demand for Apple's premium priced products. Even with this, Apple is still a great company. The Apple ecosystem is undeniable. I know even for myself, you get an iPhone, next thing you know you have an Apple Watch and a MacBook, and they all pair together so well. You can send things, your family tends to have them, you can airdrop them. It just makes life a lot easier, being able to have all your devices connected under one system. Looking back at the last year of trading for Apple, the stock did go through some highs and some lows, as you can see with falls off and then rises back up, and then the recent consistent fall down and down lower with rising interest rates and fears with sell-offs happening in tech and consumer layout and lots of fears in the overall market. Touching on Apple's issues in China, the company is having problems with its main factories over there with fears such as the lockdowns. This is a big problem as they are a major supplier for Apple's products and lots of Apple users are based in China. Apple does have a very sticky, strong moat where people don't tend to leave Apple products behind and tend to stay with them, consistently upgrading. Another article by CNBC compares Apple and Amazon's losses of $800 billion in market cap in 2022 and kind of puts it into more perspective of what it really looks like. Just the losses in the last year of $846 billion, this is equivalent to 8 Intels or 10 PayPals, 18 Snowflakes or 49 Rivians. This just shows you how big Apple truly is and how big of a loss they've faced in this last year. Apple as a stock still trades at a fairly high PE, but that is because this is such a good growth company with a strong history. You pay extra for a company knowing that there will be potential growth and the strong moat that Apple has. They even pay a small dividend that is growing, but it isn't a major factor in terms of someone wanting to invest in the company. Another article was put out as analysts have slashed some of their expectations from around $180 to $140 a share. Going through, there's 2 good graphs as well, kind of seeing how the big tech losses and weighs the S&P 500. Every investor knows that big tech plays a major part in the overall S&P, and when big tech is up, the S&P is up, and when big tech is down, the S&P feels that as well. It also shows Apple versus the S&P since the iPhone introduction, and you can see for any early Apple investor how well they've done. Even with smaller sell-offs like the recent one, you can still see how good Apple has done as a company and as a stock in recent times. You can see their projection even after the sad loss of Steve Jobs how well they've done under management. This is another factor I wanted to touch on. Apple does have such strong experienced management that even through times of turmoil, they should still be good. People still love their premium products and are still consistently paying for them, even if they don't realize how much they are. Things such as Apple services, companies paying to be on Apple's services such as their App Store, Google paying to be the number one search engine on iPhones. These are all companies and consumers paying Apple and keeping their cash flow running. And speaking about cash, Apple is known for holding an incredible amount of cash. They can pay off all their debts if necessary, meaning that they are in no risk of going down anytime soon. My thoughts as a shareholder is yes, even with economic issues and consumer spending problems, Apple is still strong and still well positioned. They're not going to go down anytime soon with issues such as debt, and worst case scenario, they have to start laying more workers off. That is something they can still do and still be more effective. I myself have an average share price of $134, and this is now fallen under my average cost, meaning I am potentially looking at buying in. This doesn't mean that the share price can't fall anymore, as we know it can, especially when you look at other great companies that have fallen as well. But Apple is still such a strong company, I'm still potentially looking at dollar cost averaging in, and even when I'm buying into the S&P, I'm still buying into Apple with its large market share. Overall, this was just a quicker update on what is going on in Apple, and kind of giving you a better idea of the whole situation and why Apple stock is falling. If you're an investor in Apple, this is something you should look more deeply into, and something you should consider potentially adding it more to your portfolio. Leave your thoughts on Apple stock and the recent sell-off in the comments, and if you're an Apple investor, and for more finance and business content, subscribe to Business Ventures.